Okay, I will start. So as mentioned, I will firstly go through the results of the group, then Spanish and LATAM operations in more detail, and then Q&A. It's been an exciting 9 months. I think the third quarter has been, let's put it this way, less volatile and more predictable compared to the first half of the year. And the third quarter allowed us to actually gain some of the momentum and build on the foundation and the groundwork that we have laid in the first half of the year. So overall, for 9 months, we achieved almost the same amount of revenue as the full year last year. We have improved our operational efficiency and increased our operating income margin, which is now approximately 10% of the revenue. So when looking at the income number, we already surpassed the full year 2019 results. And that was, if you remember, and for those who've been tuning into our previous webinars, that was our key focus during this year, is to make sure that our operations are solid and efficient, make sure that we don't lose operational efficiency through the volatility of 2020, through the COVID, through turbulence in the capital markets, through changes in demand and the behavioral patterns of our clients. And I think overall, we've done well. We've even improved versus last year. We are now undoubtedly the leading alternative lending brand in both Spain and Mexico. So in 9 months, we have increased our market share in both of those locations, as well as we grew our user base to almost 5 million users in the region. A couple of interesting items, not as much related to the financials, but still very important. We as a company put sustainability as one of the key values for the group. This year we have become carbon neutral organization. We have also received the ISO certification for our IT platform. Couple of words about COVID. I think now it's not, well, basically we have to learn how to live with it. So we've made our workplace COVID-free. So some people continue to come to the office. We want to make sure that the safety and the well-being of our employees is critical, is very important, and we make sure that all of the possible precautions are used and implemented in our offices. We follow very closely to what the governments are doing with regards to the COVID measures. We don't expect the future COVID measures in this year to be as strict as they were in the beginning of the year, in the first half of the year. But I still think that there's at least 6 or so months until we kind of go back to the normal or the pre-COVID life. So I think the end of this year and the first half of next year will still be challenging, with different measures being introduced by the government in terms of travel policies, mobility, commercial activities in the country, also in terms of the rules and the recommendations for the financial institutions with regards to their loan payments. For example, in Mexico, there is a deferral of loan payments of up to 6 months. In Spain, there was a deferral of loan payments for almost 6 months, which has ended, but it might be reintroduced. We are closely monitoring the situation. But overall, I think we are prepared. We went through the first 9 months of the year strong. As you will see, country by country, we have actually improved the results compared to last year quite significantly. And we continue to be prepared for future, let's say, unexpected, expected results of the COVID, whether it's working remotely, whether it's additional risk management actions that we'll need to do with regards to the portfolio quality, whether it's changes in the underlying product, whether it's extensions, whether it's changing the penalties, extension fees, etc. So we're well prepared for that. From funding point of view, we have added another funding source, and we will continue to tap it in the future to make sure that we have enough liquidity to grow the business as planned. We continue to hold significant cash reserves on our balance sheet to be able to go smoothly through, let's say, the volatility peaks that might or might not happen in the next few months. And given that we operate in emerging markets like Mexico, we make sure that we don't have exposure to the volatility of this local currency. So whenever we can, we raise funding in local currency. If we raise funding in US dollars or euros, we make sure it's hedged to the Mexican peso. So Spain. So the revenue numbers are about 50% growth compared to 9 months of last year. So we have achieved up to date almost 48 million of revenue, which is roughly the same as for the full year 2019. But more importantly, with the 50% growth in revenue, our net income is almost doubled. So the cost base or the efficiency of our operations has improved. And I think this is the key achievement for this year. So we've managed to not just to sustain the profitability of the business, but we managed to improve it while growing through the COVID. And I think this is a great result by the team in Spain. They should be quite happy with what they have managed to achieve this year. In terms of the portfolio quality, if you remember, we mentioned it in our previous webinars and also in our regular updates, we have reduced the approval rate in Spain, which means we became more conservative in our credit policy, i.e. approving less clients in terms of percentage from the total application than before. And as a result, the quality of the portfolio even improved if we look at the first quarter of this year versus the second and the third quarter 2020. So the actions that we have done with our credit policy have more than offset the deterioration of the macroeconomic environment that we've seen in Spain. In the result, that's also what contributed to the improved profitability. So as a result, with the revenue grew about 50% versus 9 months last year, and the profits almost doubled, increasing our equity positions and the risk, generally the risk in the Spanish business has reduced this year. When looking at sort of the remaining couple of months of the year, I think overall the trend will continue, and we expect to close the year doubling the net income and by approximately 50% growth in revenue. And now we are less than 2 months away from the year end, and we are on track to achieve those results. We will continue to be conservative on the credit policy point of view, given the next and the second wave of COVID. So we don't have intentions to relax the credit policy until we see, let's say, sustainable improvement in the COVID situation and we see things are going back to normal. So for the next 6 months or so, we will continue to be conservative, and the efficiency and the net income margin will be one of our key priorities and the key KPIs for the group and for the Spanish operations in particular. That was Spain. Again, I'll make sure I'll give everyone a chance to ask questions. But before that, let me talk a bit about our Mexican operations. Just a quick reminder, towards the end of the first quarter this year, as we started to see the impact of the COVID and its impact it had in capital markets, we decided to focus on Mexico and putting Brazil growth on hold. And as a result, Mexican operations is roughly now 90% of the business in Latin America. So when we talk about the numbers in Latin America, 90% of that is actually Mexico. For us now, this year, the key was to achieve significant market share, achieve strong profitability figures, and become the leading alternative lender in Mexico. So that was the goal for this year. Well, after the whole COVID thing started, and I think overall, with various bumps on the road, I think we are on track. So when looking at the revenue for the 2020 figures, we already achieved higher revenue numbers than for the full year of 2019. And overall, we expect roughly doubling the business versus in 2019. The gross portfolio has already doubled. The revenue doubled. Now we want to make sure that this trend continues for the remaining 2 months of the year. Again, we don't forget about sort of our core values of the company. We make sure that the business that we are building is has responsibility as part of their core values. So sustainability and responsibility is always important for us, and hence the actions that we do with regards to carbon neutrality, with the socially responsible enterprise in Mexico, and it will always be an important part of our business, not just the financial results. So I will continue, as boring you with the action items that we do with this regards as well. So not just numbers, not just financials. Very importantly, the NPL, the quality of the book, very similar picture to what we've seen in Spain. We have reduced our approval rate by about 1/3. So we've started to approve less applications than previously. As a result, the quality of the portfolio has improved. And now it's at the level that we want to keep it throughout the remaining 2 months of this year and throughout the next year. We see a strong demand for the product, partially just huge opportunities, the size of the country, the size of the economy, and an early stage of the development of this sector. So even looking at next year, we see a clear path to continuous growth, and the potential growth opportunity will allow us to double the business next year as well. Again, very similar highlights to Spain. The cash buffer remains very important, right? We are, let's say, living through a very volatile period in the world economy. So it's important to keep extra cash buffer on the balance sheet to make sure that we can absorb unpredictable bumps on the road. We will continue to have this internal policy of having at least 10% of assets in cash. Hedging, as I already mentioned, we have no intention of taking the FX risk. Like, we're not in this business, and it's not something we are planning to do. We're not an expert on FX. We don't know where pesos will end, so that's why we will always be looking to hedge this risk. And financing, we now working with a number of local debt providers to source local funding in pesos, again, to diversify the funding base for the business and to make sure we have enough fuel to grow next year. Well, that's very briefly. Now to a much more exciting part of the webinar is Q&A. And as a reminder, you can see our inbox, ir@idfinance.com. You're always welcome to send questions. I personally am copied on all the emails that go into this inbox, so I do see every question and I make sure that they get answered. Okay, let me open the chat. Plenty of questions. Excellent. A lot of questions about the sound. So I didn't see the comments because I have a presentation on my screen, but hopefully everyone figured out how to improve the sound settings. If for those who missed some of the webinar, we will be sending a link to the webinar, so you'll be able to listen to it again. Okay, first question. Are we thinking about expanding to other countries like Peru, Colombia in the near term? First of all, Colombia, Peru, Chile, very exciting and interesting markets. Are we looking at them? Yes, we constantly monitor the new opportunities. If we talk about near term being, let's say 6 months or less, then no. We will consider new countries probably 12, 18 months from now. At this point, we see a lot of opportunity for growth in Spain and Mexico, and we will utilize the capital that we have and that we will be raising in the future in these countries for now. So new countries will become relevant, I think, for us maybe in 12 months' time. But we do constantly monitor the opportunities. Sometimes it's very difficult to say no to trying to set up something in Colombia or US or Peru or Chile because of the sheer size of the opportunity. And I have colleagues who are running similar businesses in Colombia very successfully. So good market, interesting opportunity. Has COVID initiated new product developments to manage the default rates? Well, actually, it was the other way around, that partially due to the COVID, we have postponed some of the new initiatives, like for example, new countries or new products, and we decided to focus on making sure that the existing products are profitable. So we have changed the settings in the product to be more conservative from the risk point of view, and put all the available capital in growing Spanish and Mexican operations. So actually, the COVID had the effect that new products which require capex or have a lot of uncertainties around it have been postponed until next year. Whilst we decided to focus on the profitability and growth of the products which we already understand and where we have a clear understanding of the profitability and how to manage it. So it was the other fact. And yes, M&A acquisitions is a very good way to enter new countries. So yes, we are considering. We're always happy to look at the opportunities. We looked at some. But it's from our experience, it's always quite difficult and time-consuming to do an M&A. But if something interesting is available, always happy to look at. And to buy companies at deeply discount prices is a good idea, but unfortunately, good companies don't want to sell at deeply discount prices. So you end up buying bad companies at the discount prices. That's true, but usually good companies don't sell at discount prices, they wait through. So even if the company is public and the shares have dropped, most likely you will not be able to acquire that company. You'll be able to pick up some of the selling investors, but to accumulate a controlling stake usually would not be possible at those discount prices. For example, the M&A would usually M&A in the crisis would usually involve, I don't know, 200, 300% premiums over the trading prices, over the currently trading prices. I mean, that's what we've seen pretty much in every country. Peru, Colombia. When crowdfunding, you had an IPO in mind, is it still on the radar? Yes, it's still on the radar. In terms of timeline, I think we are at least three years away, I would say. Potentially it's possible to push it earlier, but we don't want to do an IPO just for the sake of it. We want to do a good IPO, right? At the right size, at the right price. So I think overall, 2 years, and then in the third year, based on the track record, it would be a good time to do an IPO. I would like to double check on general portfolio. ID Finance needed to reprogram loans of their clients. If yes, for how many months? So yes, due to the COVID, we acted in line with the, let's say, regulatory and government recommendations to allow people to extend their due dates, depending on the country and on the case, or on the client and case by case kind of situation. The extensions were up to 6 months. The extensions didn't mean that there were no payments at all, right? So, for example, you could extend the due date of repayment of the notional amount, but you still had to repay the interest, for example. So the client could not get away from not paying anything and still being considered as an not past due. But the due dates have moved in some cases. Overall, in Mexico, the effect happened a bit later than in Spain. So Spanish portfolio experienced it earlier, and as a result, the whole thing finished earlier. And that's why, for example, you are seeing that the duration of the portfolio on Mintos in Spain has resumed to normal, while in Mexico, it kind of the whole thing happened a bit later. So the COVID hit them a bit later, and it wasn't dealt as well. On one hand, it wasn't, the lockdown and the actions weren't as aggressive as in Spain, but the flip side of that is that it all kind of extended and merged into a second wave. So it never really ended. So the first wave never really ended in Mexico. It was kind of first wave, and then the second wave came before the first one stopped. So it was like kind of breakfast turning into lunch and into dinner. So that's why the effect in Mexico is longer, and we're still seeing clients applying for the extensions now rather than, I don't know, 3 months ago or 5 months ago. While in Spain, like for example, in August and September, we hardly had any applications for the extensions. While in Mexico, it's more like a continuous process. In terms of marketing activities for new client acquisitions, it's now roughly back to normal. So we do acquire quite a lot of new clients in Spain. In Mexico, we are slightly less active versus Spain in terms of the activities, but the overall demand in Mexico is higher. So with less activity, we get quite a lot of new client inflow. But overall, the business is back to normal, subject to a much more conservative risk policy and a longer portfolio duration. Mintos score for ID Finance is quite low, only 6, while IDF Eurasia is scored 7. Do you know why the score is 6 and why it's lower than Eurasia? Well, I do know why, because Mintos have no idea what they're talking about. But on a serious note, it's difficult for me to comment on a score which is created by someone else, right? I don't want to. They have their opinion, we have our opinion. In my view, for example, our Spanish operations is a clear number 1 in the market, has a capital ratio of more than 20%, has been sustainably profitable throughout the COVID and even improved the results. We have one of the highest, if not the highest, client retention rates in the industry. What else? We have access to capital markets. We are raising funds at the much lower rates than some of our peers, which you can find on Mintos as well. So in my view, like for example, our Spanish business is it should have the highest credit rating from all the peers. Like so, but that's my view, right? And maybe my view is biased as well, because like I understand and I know our business much and our metrics much better. When looking at Mexico, it has a smaller track record. It's a younger business and it became profitable only this year on the bottom line profitability. So it became large enough to cover all the fixed costs only this year. So I can understand why, for example, our Mexican business would be rated lower than Spanish business, yes, but why some of our peers are rated higher than our Spanish business, I don't agree with this. But again, that's my view, and I think there is a agree to disagree is where we left it off with Mintos. But I wouldn't rely too much on this score, to be honest. We have been IDF has been very passive in Mexico for the past 2 months in terms of acquiring customers. Are you planning to continue with this strategy? Well, I don't agree that we have been passive over the last 2 months. We have grown in the 3rd quarter versus 2nd quarter significantly. I think it's like doubling the size of the business. So I'm not sure where this comes from, where that we've been very passive. So we've acquired in the 3rd quarter of this year, we've acquired more clients than in the 2nd quarter of this year. And in the past month, we've acquired more clients than in the, let's say, 3-4 months ago. So we are continuing to grow. We're continuing to acquire clients. What we see is that we don't have to pay much to acquire those clients because there are a lot of them. So I'm not really sure what's the background for this statement. And we will be participating in Black Friday, Christmas, etc., and we will be actively acquiring the clients through this period. What is the share of different products on your portfolio, MoneyMan Plaza? At this point, like 80% of the product is MoneyMan. Within that, about half is installment loans up to 6 months, so 3, 4, 5, 6 months, and about 50% is a shorter term product, up to 2 months. Plaza was actually one of the products which we have slowed down due to the COVID, because we wanted to focus, as I mentioned, on growing the well-known and well-understood product. Plaza is we're still running Plaza. It's in let's say in hibernation mode. This is where we're actually not acquiring a lot of clients, and we will be, let's say, resuming more actively for the Plaza product next year, with the APRs significantly lower. It's going to be lower than 40-50% mentioned in the comment, it will be closer, it will be sub 20%. So we're moving to prime, very prime clients territory. It will be a really cool product. It's going to be like a Plaza card. But unfortunately, I will have to stop myself here and let you wait until the sort of the release and the news about the Plaza card. But it's very exciting. We are working on that, and you should see it in the beginning of next year. I have mentioned that the team moved to working remotely. Has the efficiency dropped? If no, how did we achieve that? We did move to remote work. The efficiency of operations had almost no effect. So I would say in some cases, in some states, it's even improved. And how did we achieve that? Actually, even before the lockdowns in March, we started testing the remote operations in February. And we would take a team, put them at home, and then compare their results and the efficiency with the team that was working in the office. And if in the beginning, their efficiency was lower. So we were trying to understand why. And things like slow internet connection, bad headset if it's a call center, notebook is not powerful enough, the one which is at home, and things like that. So we made sure that the environment, the working environment at home, is as similar as possible to the working environment in the office. And for example, for some of our data science teams, given that the amount of data they're working with, the mobile internet that they had at home just wasn't fast enough. So we made sure that the internet connection are appropriate for depending on the team and depending on the person. We made sure that their IT hardware is appropriate, and then eventually, through a couple of iterations, we managed to achieve the same efficiency for people working remotely than compared to people working in the office. So now, and at least until the end of the year, working in the office for the company is optional. So if people want to come, the office is open. They can come and work. If they don't want to come to the office, or I don't know, they feel ill or don't want to be exposed to potential virus in the tube, in the public transport, etc., they obviously more than welcome to stay at home and work from home. So this is what we will continue to do. But working from home is not an excuse for lower KPIs. So we haven't changed any of the KPIs to the people, to the team. How much do we typically recover from the non-performing loans? Typically, it's about 30% over the 2-year period. So even after the 90 days due, we continue to work with the portfolio. Partially we work ourselves in-house. Partially we outsource the work with the portfolio to the DCAs, debt collection agencies. We go to courts, we continue reminding of the payments, and over time we do recover about 30 to 40%. Good. 5 questions from Max Katie. What is the average interest rate? So when looking at the MoneyMan product, the average interest rate is approximately 20% per month. However, we do stop accruing the interest once we achieve 100%. So the total debt that person can accumulate even after default would not be more than double the amount that they have borrowed. This is not a regulatory requirement, but this is in some cases like a self-regulation by the industry, common sense, part of responsible lending practices that is actually becoming more and more widely used across the world. And for example, even when we look at the countries with the more strict regulations like UK, they take this 100% ceiling as a guidance. So for example, in UK, regulations have put a cap of this 100% of the total indebtedness, and we use this as a guidance for operation in other countries. Do you see growth by taking market share from competitors, or is there is a room for everyone? Well, there is still room for everyone in Mexico. In Spain, the market is quite competitive. So if you want to grow significantly or become of a reasonable size in Spain, you have to eat someone else's piece of market share. But in Mexico, it's not the case. In Mexico, there is still a lot of room for everyone to grow. And sorry, I've missed the final default rate. So the final default rate on the vintage basis is 10%. So for example, I know that in November, I will issue approximately 20 million euros worth of loans. I know that at the end of all my activities, I will have to write off about 2 million of euros due to the default rate. How concerned am I about the regulatory risk? Well, it's always on the agenda. We always monitor the situation, and we're in constant dialogue with the potential regulators. We've seen regulation come in various countries. Regulations actually, in most cases, are supportive for the growth of the business and the growth of the markets. It removes, once the regulation is actually in place, it removes the uncertainty. And uncertainty is actually the worst thing in the market. So we would rather have the market with the regulation, because then it's clear and transparent for everyone what are the rules of the games, and then you can project your business over a longer period of time and can build the long-term projections. So I wouldn't say I'm concerned about regulatory risks. I'm waiting for the regulations to come. We would encourage regulations to come, and we are always open to dialogues and working with the regulator to set up the right framework for the markets to develop. Will we expand in new products in Spain? Yes, that product will be Plazo, and beginning of next year you will see it on the shelf. The interest rates in Mexico versus Spain is actually very similar. Again, it's a combination of responsible lending and competition. Some of the companies in Spain and Mexico are part of the same groups, so we compete against similar players in both countries. So overall, the rates are roughly the same. In Mexico, there is some difference in taxes. So, for example, clients have to pay VAT on the interest which is being charged, but that's the only difference. Otherwise, very similar products, very similar interest rates. What factors of growth for your business do you see in Spain? Well, when we look at our business, we actually increased our market share by eating into others' client base. I think throughout the COVID, we managed to increase our client base by successfully competing against some of our peers. But even without that, overall, the economy is not going through the best times, and you see clients which previously worked with banks and now sort of fell out of favor, or banks have stopped lending. A lot of banks in Spain have stopped lending to the outside clients. So if you walk into a bank where you don't have your salary, they will not give you a credit card, most likely. So Spanish banks became very, very conservative throughout this year. But those people, they still need finance. They still need money. They still need to cover some of the expenses, some of the unforeseen expenses, so they come to us. So when things in the economy aren't great, this is a large source of growth. When things are going well, then the economy is growing, consumer finance market is growing, and our share of this market increases in nominal value. So if we were, for example, I don't know, 2-3% of the consumer finance product, as once the consumer finance market grows, our 2% grows as well in nominal value. So we have sources of growth in both growing economy and let's say throughout the crisis period as well. How do you expect to use the proceeds from the bond? The proceeds from the bond will be used to grow Spanish operations because the bond was issued out of the Spanish OPCO, and the funds will be used to grow the Spanish business and to launch the new product that I've mentioned in the beginning of next year. We will allocate this capital over the next half a year, roughly. Someone knows what they're talking about. Working with a tighter risk policy means relatively higher data costs due to lower acceptance rate. They do know what they're talking about. So basically the question is, how did we tackle that? Well, a couple of things. First of all, we did renegotiate some of the costs. I mean, we are all in the same boat, and our partners understand that in a more difficult time with a lower approval rate, the cost per data point should be reduced. Also, with growth of our business, the cost per data drops, and that's one of the advantages of that we get with scale. So the economies of scale is a huge factor in this business, because the bigger we are, the cheaper it is to acquire a single unit of data point. And that's effectively one of the biggest contributor to the improvement in the efficiency. So our gross portfolio increased, approval rate went down, and NPL is down as well. So how did we achieve an increase in gross portfolio? Well, we've seen that throughout the COVID, a lot of peers have either slowed down the operations, or some of them even pulled out of the market. And very good clients from our peers, they now sort of they move to working and working with MoneyMan. So I think that was the biggest contributor to high quality growth that we've seen. What is the difference in interest rates and default rates in installment and single paid SPL, a single paid loan product? Because the way we work, we start offering 3, 4, 5, 6-month products to our repeat clients, so to the ones that we understand. So we increase the duration, we increase the size, and we start dropping the interest rate for those clients. And because of the fact that they are all repeat clients, the default rates are significantly lower. They're less than half of what we see for new clients. So the installment loans, the installment products that we have a much higher quality performance and a lower default rate. But this is biased because the population of clients is only repeat clients, while the single pay loan product has both the new and the repeat clients, and it's and as a result, the NPL rates are higher on that product, but not because the product is bad, but just the population of clients is a bit different. And so roughly, the NPL on installment loan is half to the default rates in the single pay loan product. Any interest in exploring other emerging markets like Africa? Well, a lot of interest, but not enough time at this point. So we will first we will stick with the countries where we operate. If and when we decide to expand, this will be in the similar region, so Americas. And once we do that, we will look in other regions like Africa, Asia, etc. But for now, it's Spain and Latin America and Americas. Outlook. What is our outlook for the next 2 and 5 years with regards to source of financing, like Mintos versus bonds? And what are your considerations, pros and cons in this? Well, I think if we look at the longer term strategy and the development of the companies, not just ours, but in the industry, they will move away from Mintos to bonds and to more institutionalized funding, just because it's more suited for those purposes. It's longer duration, it's cheaper, but it doesn't mean that like no one is going to use Mintos. It just each funding source is better and more applicable for a certain period of time. And if you will see, the companies on Mintos are on the earlier stage of the development versus the ones who are doing bonds, again, due to the minimum size requirements, due to the cost of setting up the bond transaction, etc., etc. And we are not an exception, right? So looking at our Spanish operation, we can see that, for example, for the bond, it's cheaper than for Mintos, because on Mintos we are competing with companies who are willing to pay 15-16% interest on for their funding, and it's not, and unfortunately, it's not always transparent to the investor the true risk behind those investors. And we've seen this year a number of big defaults on the platform, unfortunately. And many of those companies were able to attract a lot of funding because they were offering high interest rates. Like before, some of them would increase their funding cost of 20, 22, 25% in euros before going into bankruptcy. And obviously for an outside observer, it's a very interesting opportunity. Wow, I can invest into a business at a 20, 25% fixed income return. And then why would we choose ID Finance? We're offering 11, 12%. If I see a similar business offering me 20%, and I can understand the logic in the investors' heads. Again, given the limited amount of information they have, they might think that the risk return on the 20% investment is better than the risk return they're getting on, like, investing into ID Finance. And that's why as we grow and become stronger and the risk of the business drops, Mintos becomes less relevant and less appropriate for us. Not just for us, right? If you look at the large peers like Innova, Ferratum, they're all funding their businesses through capital markets at a lower rates versus the originators in Mintos. And I think that's just the situation. Right? Everyone has its place in the world. So I think next couple of years, yes, we will continue working with Mintos. In 5 years' time, I think companies like our Spanish operations will move to the bonds, but then we'll be setting up new businesses in Colombia, in the US, whatever. And they will be in an earlier stage of the development, and Mintos would be an appropriate platform for them. So that's how we look at it. Interesting question from Tom. Is Kieran still on the board? Unfortunately, no. I mean, I've known Kieran for many years. Great professional, and I think he contributed a lot to ID Finance while he was on our board. And he's now back into a more full-time, I'm not sure if it's full-time, I don't know the details, but then he's now in a much more full-time involvement with For Finance, and obviously due to the potential conflict of interest, he's no longer on the board. But I wish him all the best with For Finance. Do I see any risk regarding possible regulation in Spain? So as I mentioned, I would welcome regulation. I think, and from our experience, it's always better to discuss regulation and to introduce regulation in a collaborative manner with the regulator, rather than just to sit and wait. And that's what we're trying to do, is we're trying to have a constructive dialogue with the regulator. So it's not just risk, it's also an opportunity. Like a well-structured regulation would have a huge positive impact on the industry in Spain as a whole, and our company in particular. Okay. Let's see the chat. Yes, I see. Unfortunately, I still see people having issues with the sound. We will take it on board. We'll make sure that it's louder next time. But we will be posting the webinar presentation, and if you have any questions, you're always welcome to send them to ourselves. I'm sure a lot of people here are from our peers, given the questions I see here. That's good. Sharing knowledge is always good. Anyways, a few more questions I see. Do we have debt sales of bad portfolios? If yes, how COVID impacted those? Yeah, we're always looking and checking the market to sell the portfolio. We always compare it versus what we will collect ourselves. Spain as a whole doesn't really have a very active market, for example, compared to Poland, to Russia, to, I'm sure, to the UK, to the US. So overall, the trading, or like the purchase and selling of bad portfolios in microloan segment in Spain is very inactive, very inactive. For us, we haven't done many sales. We've done a couple, we've done a few. We are seeing that the markets, I think the market and the prices were at its lowest in like April, May. Now they're slowly recovering, but they're not that great. In many cases, we're able to collect more ourselves. That's why the amount of sold portfolio is very limited. But if anyone wants to buy, happy to, or sell, happy to look to selling or buying. If it's cheap, you buy. If it's expensive, you sell. So very, very straightforward. So for example, on the back of it in Russia, like our sister group, they have set up a company which specializes on buying that portfolios, because at one point the prices were low. So we thought, okay, we can't sell, so we should buy. Happy to do that in Spain as well. But overall, I think things are now definitely better, clearer than they were, let's say, in the second quarter. People now learn how to deal with the COVID, adjusted their operations. Those who could adjust, they are continuing to operate. Those who couldn't had to pull out. So we are pretty much in a new norm of running business. So can we continue running this business through the second and third wave? Yes, we can. Unfortunately, there will be no, hopefully there will be no fourth, fifth, and sixth waves, but you never know. I'm sure people miss traveling. Okay, I don't think I've missed any questions. I see people starting to drop out from the webinar. Okay, so let me type it in. Let me remind everyone on our inbox. So you're always welcome to send questions, comments, suggestions, criticize us, whatever you feel. You can let your frustration out just by sending us email with your thoughts, whatever. Always happy to receive emails. Okay, so thank you everyone. Getting in touch, excellent. Thank you for your time. We will be hosting a similar webinar next week. We'll talk about our Eurasian business because we also work with Mintos on our Kazakhstan business. So we will give you an update on that part of the world next week. So stay tuned. Always stay safe and take a good care of yourself. Thank you.